So Ian, let's go to the next section, because this next section talks about 1 million. It's a simulation. We had talked about simulation earlier, but this one now breaks down month on month. So just take us through this graph where we're looking at a 1 million simulation on the growth of that money that has been invested, 1 million, from 20th of February to the 30th of November. Okay. Yeah, walk us through that.
Okay. If you look at the first month, you see 1 million basically would have yielded about 71,000 shillings, which is quite a big leap, if I may say, about 7%. The second month, still a good month, whereby you see, give or take, it's around the same thing, about 71,000, so still about almost 7%. But you go to the third month, whereby there is no much increase, basically a growth of about 9,000 shillings for the month. This comes in to show you that we are trading in this fund, and trading has its ups and downs, just like any other business that you might have. There are businesses that suffered through COVID. There are downtimes. If you are in the maybe clothing business, you might find in December maybe you are making more sales, and there are other times that you have low sales. The same thing we encounter sometimes in our fund, whereby there are times where we have a boom, we are able to make quite huge profits, and sometimes it's not a very good month because it's a trade. We actually deal with trading all the time. So we might have a few losses, or maybe the profits are not so high. And that's why you'll see the variation on month. It's not a straight line because we are not an interest-bearing fund. Interest is part of the income, but not the whole income. And so the whole simulation is just to show you how the growth has been. So sometimes a bit drastic, sometimes a bit modest. So this is a simulation for someone who invested at the beginning or at the inception of the fund, which is 20th of February 2024. But on a daily basis, there are new clients who are coming in. And based on where you came in, you expect your fund to grow based on the behavior of the fund at that very moment. So if you came in whereby we did not have a big leap, you don't expect it to reflect as a big leap. It will just be consistent with the fund growth. So that is what happens. So everyone will have different returns based on the time that they've come in on the fund and how the returns of the fund have been at that particular point.
Yeah.
Yes.
How is the fund affected by the US elections? Because that was a very interesting season.
Yes. I'll say there's directly and indirectly. The first thing is currencies were generally affected, especially the USD. That being the second major currency in our fund, because we trade in the global space, and majority of what is traded in the global space is basically in USD. USD was expected first because of cutting of rates to actually weaken at first, and we had a general weakening. But as elections came and we saw Trump is winning and everything, people are overconfident, and especially they knew his policies, he's been there, they knew what to expect. And we had a lot of strengthening of the dollar. Also, it was accelerated by what was expected of Trump helping the crisis that we have. There was the Middle East, and also the Russian war, to be calmed down by Trump coming in and maybe negotiating for that. So that led to a lot of strengthening of the shilling. It was actually seen that as much as the dollar was strengthening, even the Kenya shilling now flipped a bit, because we had seen the USD against the Kenya shilling move to around 129, headed to 128. And at one moment, we actually saw it going again back to almost 130. So has it affected us? Yes, that has affected us in what we called exposure earlier in the explanation of the fact sheet. And also, still from that, we have taken advantage. There have been a lot of volatility, especially in November coming to December during that election point, because everyone had different views. So it has affected their stock markets, especially the stock markets have been really affected. So the volatility is something that we have taken advantage of. Also, the views on metals and oil have also been affected by the elections. So on a daily basis, there are dealers who are looking at the markets, and for those movements, whether positive or negative, we are able to either buy or sell and be able to give a return to our investors. Yes.
There's a question I have here on how money compounds. So one of the things that people like to see is the compounding of returns.
Yes.
How does that play out for the investors of this fund?
Okay, I like that question because I had an institution which actually told me they were looking to invest, after 6 months withdraw, then reinvest so that it can compound. And I told them, because maybe for them that's what works in a bank. Because in a bank, typically, if you put 1 million, it's simple interest. So if it's for 1 year, it will continue until the end of the year. But if you can get it for 6 months, and then after 6 months, you can now reinvest with the interest, you'll actually get more. And I told them, here you don't need to do that. Why you don't need to do that? The way the system works, and that's why when you ask how often does the fund compound, it's actually a bit of a complex answer. We say that on a daily basis, income is either earned or accrued. By earned, if you do a trade, a buy and sell of, let's say, a currency, at the end of the day, you have a profit or a loss. That profit or loss first is going to be credited to the clients. However, has it been received? That is the question. If it has been received, that means it's compounded. You can use that money to reinvest somewhere else. But an example of, let's say we bought a treasury bill for 6 good months. On a daily basis, we recognize the interest that is coming from the treasury bill. And that one is credited to your account. So it shows that it's money in. But can that money be reinvested? No, it has not been received. Until the end of that term, whether it's a deposit or a treasury bill, until the end of it, that's the only time you can now use the money to invest in somewhere else. And that's when you can call it compounding. So daily, we credit all incomes and losses. However, until received, that's when you can say you're compounding. Do you need to withdraw and reinvest? No, you don't need. The system on a daily basis revalues what you have, including all your incomes, and distributes all further incomes based on what you already have. Yes.
Okay. I think just finally, I just want to go into this commitment that we're making to our clients. We're talking about being transparent, being professional, being responsive, being tactful. We've talked about being people of integrity, but the one I want us to talk about is safety.
Yes.
Is my money safe? Because we've said our commitment to our clients is providing service with safety.
Yes.
You may have alluded to it earlier, but I wanted to just talk about that for a moment.
Okay.
How are we ensuring that the money that people bring in is safe?
Okay.